Well, welcome back, friends. We've got a very special one for you here with the Doc from Silver Doctors and Eric Dubin. And, of course, our contributor, Rory, is on the line. Doc and Eric, how are you?
Doing well. It's great to be back with you guys, Sean and Rory.
Very good. Yeah, thanks.
Well, we're thrilled to have you. And, Rory, we just did a recent call with Marco Byrne from Gold Core, and that yielded some interesting information, didn't it?
Yes, it did.
And here we are with two of the premier researchers in the space. And I just wanted to thank you guys first. SD Bullion is your Bullion website. Thanks so much for your support at sgtreport.com. It means the world to us. You guys do great work over there with some of the lowest prices. I guess the low price guarantee, right?
Yeah, we're really excited to sponsor the SGT report, and it's been a great relationship so far.
Our thanks to our sponsors. If you want to support them, you support us. Guys, I wanted to start by talking about this SRS Rocco report that top silver miners have lost money producing silver at $19 per ounce in the third quarter. Now, we've talked about this cost of production for a very long time. Our friend Andy Hoffman has noted that silver miners are losing money. And with silver at $16 an ounce, the fourth quarter is probably going to be a bloodbath for the primary silver mining industry, and as SRS Rocco puts it, the silver mining industry that actually produces wealth, unlike the bankers who behave more like a blood-sucking leech. Gentlemen, what is your thoughts on the current silver prices, and my God, how do you make your business work when the price of metals just keeps falling?
Well, the cost of production on most primary silver miners maybe north of $20, and a good many are actually north of $25, so it's going to be a long time coming before the industry returns to profitability. There's also, too, the aspect that somewhere around 70% or so of silver is actually produced as a byproduct of copper mining or gold mining or other base metals and what have you. So the opportunity for lags in the transmission mechanism between what price signals send to what the industry wants to do in terms of investment and further exploration and whatnot gets even more complicated with silver than you'd see even in gold. So there are periods where we can dive below the cost of production for a good chunk of time and have pretty significant distortions. And, all of this is made worse by the fact that the market is massively manipulated by the powers that be, silver being the tail that wags the gold dog, and gold being, so important to the whole financial infrastructure of our global economic system. So, all in all, it basically makes it a lot safer for someone who wants to be an investor in silver at this point, because the cost of production is such that at some point it's going to demand higher prices.
Well, and just a quick follow-up on that, why are the silver miners still selling their silver into the market at this point? I think it was the CEO of First Majestic who said, who really issued a rallying call for all silver miners to band together and say, well, maybe we should stop selling at these prices. Why are they still producing silver and selling it at a loss, Eric?
Well, when they have cash flow needs, it's sometimes the case that you either sell things at a loss and pay your bills, or the lights are going to go out. So they're stuck between a rock and a hard place, hard and fun.
Yeah. Well, and as we noted in our interview with Marco Byrne, you noted the manipulation, and it just needs to be stressed and re-stressed. We know the central banks are manipulating the markets. We know for a fact, quantifiably, they are buying S&P futures to rally stock markets higher, to drive stock market and paper Ponzi prices higher. And simultaneously, they are colluding to suppress the prices of precious metals in the paper markets. I'm staring at a 1 ounce Perth Mint Kookaburra right now that I purchased from SD Bullion. And as I'm listening to you, I'm just sort of thinking about the fact that, as our friend Chris Duane has reported, it wasn't that long ago, I think in the time of the Romans, 1 full day of hard human physical labor was rewarded in payment with about 1/10 of an ounce of silver. And, here I hold a 1 ounce Kookaburra, and I just reflect on the human labor that this represents, how much time it took to locate this silver, to dig it out of the ground, to process it, to make the blanks, to send them to the Perth Mint, and then to have this beautiful coin stamped into that silver, that very precious metal. And It's really inspiring when we stop and really look at the big picture, isn't it, guys? Because we realize how valuable this asset is at 16, 17. I think I probably paid 20 and a half for these with the premium. But it's worth so much more because I had my father gave me a 1 ounce silver bar at the time worth $7 or $8 back at that time. And that was years and years and years ago. That was, boy, I hate to even put a date on it. Here we are after trillions and trillions and quadrillions of dollars printed, and in this silver ounce that I hold in my hand is only worth about double, $7-8, and it's just astounding to me. And I'm babbling here, but I just definitely think that this precious asset that we talk about on these interviews is worth so much more because of the manipulation that we know exists.
It boggles the mind. I mean, it really does to think that, like you were saying, Sean, in almost 20 years, or 30 years, I'm sorry, it hasn't, it's only about double, little over double what your dad paid for it. And I wanted to ask Doc about premiums and tightening in the market. What are you seeing at this point? As far as I know that you like to use the 90% silver as an indicator of what's actually happening with the market, or I believe that's what you said in the past. What are you seeing right now? I mean, and the U.S. mints should be getting close to closing down for the year if they haven't already, to change the stamps or whatever to make the 2015s. And are you seeing what are you seeing with the premiums and tightening in the market?
Sure, Roy. And like you said, 90% I believe is one of the best leading indicators, and 90% premiums have been spiking. They're up around $3 an ounce now. Nothing quite yet to the levels we saw back in 2011 or 2008, the real big premium spikes. The U.S. Mint is allocating product. Again, obviously, I think November 5th, they suspended sales for 2 to 3 weeks, so premiums spiked a decent amount. They've come back a little bit with the Mint resuming production of the Silver Eagles, or sales anyway. We were just talking about on our Metals and Markets wrap yesterday evening that the U.S. Mint Silver Eagle sales are now within about 300,000 coins of a new all-time sales record, and that'll happen on Monday or Tuesday, assuming the U.S. Mint sells coins next week, and number one, and then number two, they honestly report those sales. So with those two caveats, we'll see a new all-time sales record next week. Overall, the wholesale market remains tight. All the private mints are anywhere between 2 to 6 or 7 weeks production delays that we're seeing. So it's not quite the levels we saw in 2013, but supplies have definitely tightened up quickly, with silver first breaking under 16 and then all the way down to that 1445 level overnight last Sunday.
Hey, Eric, I was wondering if you could share with us anything that you're seeing on the COMEX. Are you seeing raids of inventories happen in gold? Are you seeing any raids of inventories happening or continue to happen in silver with the SGE? Can you give us some quantifiable data on what's really going on behind the scenes, as this Ponzi scheme is clearly shaky at best? This house of cards appears to be collapsing around the world. I mean, if we look at gold when priced in yen, it's up 14% for the year. It's performing well in every currency except the dollar, but that's because the dollar is surging.
Yeah, well, we are just continuing that whole process we saw start in earnest in 2013 with vault supplies at COMEX and LBMA, and periodic raids of ETF exchange-traded products like GLD. The physical that's been available has been, to some extent, pulled into the market to keep prices down, and that's part of the process of setting the bottom that we're in now. I believe that we are, in fact, beyond hitting the bottom in early November. I mean, of course, it's possible that we'll see yet another kind of backing off and then a renewed effort by the cartel to bring still further prices lower. But every time they do it, creates huge amounts of physical demand. India is now hoovering up both silver and gold. A lot lot more aggressively in the decline in the price of oil, as well as actually the price of gold itself has made it less stressful for them when it comes to their efforts to keep the rupee from falling off a cliff vis-a-vis the dollar. So they're liberalizing some of the restrictions that they put in when it came to trying to slow down imports for gold. They had a plan where for every ounce or for every 100 ounces that were imported, you'd have to export another 20 ounces if you were a manufacturer of jewelry. And that has now been suspended, and they're also talking about reducing the duties. So overall, gold is picked up in terms of the annualized rate. India is now taking down more gold than 1,000 metric tons on an annualized basis. And silver is a lot higher now too, as well. I mean, they're importing tens of millions of ounces of silver a month. So it's definitely interesting to see that the pickup in demand in Asia and Russia is definitely responding to the lower prices, and that's what set the bottom in the market earlier in the November period.
Yeah, well, let me ask you this. You brought up falling oil prices, and that's on my list of questions to ask you guys about. Actingman.com was writing an article about will there soon be forced sellers of gold due to falling oil prices. The sub headline on that one was possible side effects of plunging commodity prices. A look at Russia. Quote, it's clear that a number of major oil producers are in trouble. However, Russia's central bank has actually increased its gold reserves in recent months and is now the fifth largest official holder of gold with 1,150 tons as of the latest reporting in September. My question to you guys is, what do you make of these plunging oil prices? Because it's not happening by accident. As we know, all markets are manipulated. What's the end game with these plunging oil prices?
Well, there's multiple actors going on here too. So
yeah, for sure.
For each actor, you have a different end game. The Saudis have a game where they're seeing it in their interest to see the oil shale boom in the United States get crushed, and that's in fact happening right now. The people in the State Department and the military-industrial complex and the Anglo-American Empire love the fact that Russia is feeling pressure and whatnot. Right. The fall, in my estimation, started out with just a slowdown in the economy, but then there was dogpiling on when it came to manipulation, be it from pushing around of paper contracts as well as favorable deals that Saudi Arabia was executing with customers in Asia, and all this goes back a couple of months, and it just kind of snowballed on itself. There's much weaker global economic activity going on than what is being reported in mainstream news across the entire world. It's not just the United States that fabricates our economic data, but we're definitely expert at it. So, bottom line with oil, I think that at some point it's going to bottom out, and it's really hard to tell how much further it's going to go down, because that'll be to a large extent dependent on how weak the economy turns, and we're in the process of declining economically. I don't think that the retail sales number is going to be much to write home about when it comes to holiday season, and things are slowing down. So we have both manipulation and economic breaks pushing oil down. And circling back to your ultimate question, I don't think that's going to entice selling by Russia, for example, to make up for lost revenues from oil sales. If they're feeling pressure and that they might have to sell more gold, at least that's the thesis that I believe some people are speculating about, or other actors that are finding themselves in an economic pinch or whatnot. At this stage, I think the majority of those strong hands that are holding gold are not going to be selling it anytime soon for reasons related to the economic activity and whatnot that's going on. So, I don't think gold is serving as much of a liquidity mechanism for people who would be distressed at this stage, as opposed to, say, what happened in 2008, where it was more readily used as a means of grabbing quick liquidity and sold, and that hurt the price of precious metals when
let me ask you guys this before we lose you. We see this repatriation of gold reserves starting to begin in earnest, and what needs to be addressed is the fact that on Max Kaiser's show just a few years ago, and I wrote in length about this, original articles at SGT Report, Jim Rickards was on touting the fact that if this were to ever occur and nation states were to ask for their gold back, the New York Fed and the Federal Reserve could just keep it, and it would be a way to re-back the dollar with gold. Keep the gold we have, keep other nation states' gold, and reback the dollar. He's an advisor to the CIA and the military-industrial complex, and of course, I noted in my articles that that would be an act of war, to steal nation states' gold, as it appears we did Ukraine's gold, as it appears we did Libya's gold, is an act of war. But now we're seeing these mainstream and, of course, alternative media headlines that the Dutch have repatriated their gold. The Germans want their gold back. Of course, they can't get it. And now Belgium, according to Harvey Organ, is set to repatriate its gold reserves. And he says, here comes the global run on gold, as you guys reported on Friday. What is going on here? And if Germany couldn't get their gold back, how in the heck did the Dutch?
It really began in 2011 with Venezuela. Obviously the next big stone to fall was Germany, which was rebuffed, and I think what did they get, Eric? Was it measly 5 tons they got back in the first year?
I think that's right.
Yeah, 2013 they were, after initially talking about, I think it was 1,200 tons, they moved it down to 600 and 300, and then the schedule for 2013 was 42, and they got 5.
Yeah, dusty gold, as Rory and I have noted. They got 5 tons of dusty, banged up gold. Or maybe they were newly minted bars. Actually, is probably more correct. But go ahead, Doc.
And the amount that the Netherlands reportedly quietly repatriated is really somewhat comparable to Venezuela's totals in 2011, which in the aftermath of that, along with the debt crisis, we saw gold soar to 1,900. And it's been pretty interesting that the Netherlands were able to keep it quiet and under the rug, so to speak, until their efforts were complete. Obviously, if the ones who asked for it first had the best chance of getting it, and I would say the ones who asked for it first and also have the least amount, that might not necessarily disrupt the game. Germany has a lot more to ask for back than the Netherlands do. So a couple of the small guys you can perhaps somewhat appease. You don't want them to make all the waves like Germany, hey, we didn't get our gold, if that makes sense.
And it's really clear to people in financial departments and governments across the world that we're going through a process where the international monetary system is going to sustain some kind of a reset. It's not clear exactly what path it's going to take and how things are going to evolve or whatnot, but gold is the ultimate bedrock investment to the financial system, and it's used to back up currencies. So all of these central bankers are now looking over their shoulder, realizing that we're a little bit further in this game of musical chairs, and the music's about to stop, and people want to make sure that their sovereign access to their gold is real, as opposed to hypothecated as a way into oblivion.
Yep.
So that's why we're beginning to see this. I mean, it's really not too surprising. And when the Western central bankers are beginning to get nervous, then you're pretty late in the game.
Well, I'm nodding in total agreement because you talked about you just mentioned a monetary reset, a global reset, I think were your words. And I'm nodding in agreement because we know that's coming. And our friend Jeff Nielsen has written ad nauseum about the legality and morality of a debt jubilee. They used to do it in Roman times, I think, every 50 years.
Right.
But I'm here to warn people that this monetary global reset that's in the process of happening is not going to benefit the common man. It's probably not going to benefit humanity. I hope it does. I hope there's a way that it does. I hope that the white knights come marching in on horseback and are able to wrestle this system from the maniacal globalists that want to enslave us. But I think the reality is that unless you own some physical, tangible wealth, you might well find yourself a pauper, a debt slave, a serf. And that's my ultimate fear, is that as people talk about this economic collapse that is in progress, that it is coming, that the dollar will not be the world's reserve currency for another 40 years, that eventually this system will change. When it changes, will it benefit humanity? Do you guys think, is there any chance that there could be a debt jubilee and this would somehow benefit the common man in the United States?
There certainly is. For those who aren't familiar with the debt jubilee, probably one of the best financial works was written by Ben Davies, I think, back in 2010. I think it was titled "There Is No Debt, There Is No Jubilee," if I recall, something along those lines. It predates Roman times. It really goes back to biblical times of a debt jubilee. Really, our Creator instituted it to prevent massive monetary buildups and collapses, and people would plan for it accordingly. So as far as your question, whether the coming global jubilee will benefit the common man, probably not, but it certainly will reset the system.
Right.
Do you think that
it may not even be fair to call it a jubilee, because it may have no debt forgiveness of any form. If we just had a deflationary crash, people might still have the debt wrapped around their neck, or inflating it away in the opposite direction. Both will be very, very painful. It's not likely that if you look at recent history, for example, in the Great Depression, a lot of people were very scared that the United States was going to have a full communist revolution and follow the way of the Soviet Union. And so a lot of reforms were put in under the FDR regime, and it was not universally appreciated, or a great deal of debate as to what would actually work and whatnot. But the bottom line is that you had an oligarchy at that time that actually was looking over their shoulder and a little bit fearful of ropes hanging from trees. And that's the motivating force that ends up creating the conditions where jubilee might happen. And frankly, I don't know if we're that far along in terms of the powers that be being paranoid about the general population, even with all of the police state apparatuses that they're building in Western economies in particular, all across the Western world. So, when it comes to what individuals should best do in navigating these treacherous times, diversification is really important. Owning various forms and types of precious metals is a good thing, as well as other kinds of assets. If you can sock away a good amount of food, if you happen to live free and clear of debt, those things are productive in terms of increasing one's flexibility under conditions of economic uncertainty. And it's really, the ethos of a prepper is a good thing to have. You plug into that mind state and apply that to how you live about finances and whatnot. Find some paths that are wise to walk down.
Yeah.
do you guys think that the SDR is going to play a role in the coming reset?
Drawing rights.
Yeah, the special drawing rights. I mean, that's been on the table for.
IMF system is the legacy of the Bretton Woods system that's set up by the Anglo-American Empire, and as a result, there are some natural kind of resistance to it from China and Russia and whatnot, given what's going on now geopolitically. So it's not a foregone conclusion that the new reserve basket concept would take the form of a strategic drawing right with maybe different weighted allocations in the basket. Right now, I think China only has something like 8% weighting in the yuan for the SDR, if memory serves. But that definitely could be one of the ways in which a new international monetary reserve and trade status system would be set up using the SDRs replacing the dollar.
Would that be gold back, do you think?
It would have a portion of gold, most likely. The thing, though, that you have to keep in mind is that SDRs, in terms of their total capital stock, the amount of money that's out there in the form of SDRs is real small compared to, say, the U.S. dollar.
Doc, any final words before we lose you guys here?
Yeah, a couple of things. Just kind of going back to that question on the coming Jubilee, and just kind of a personal belief that I've had in Ben Davies. Like I said in that piece, really is excellent in expanding on it. There's a lot of argument and discussion among the precious metals community that going back to a gold standard will remove this boom-bust cycle, but if you study history, when the U.S. was on a gold standard, you still had boom-bust cycles. And really, I personally believe that comes from not having a jubilee. That prevented that the boom-bust cycle, and that's really not well understood at all among definitely the mainstream financial community, but even the alternative financial community. Going back entirely on a gold standard, that's obviously much better than what we have today with straight fiat, but it wouldn't necessarily prevent cyclical boom-bust cycles. And then kind of the other thing I just wanted to touch on, we were talking earlier about the miners and the primary silver miners and how terrible third quarter they had at 19. It's just drawing attention again to the gold-silver ratio and just the opportunity it presents for investors here. If you kind of look at 2013, the production coming out of the ground, there's only about 8.3 times as much silver as gold mined.
That's right.
Historically, it's been somewhere around 10 to 16 to 1. But again, the last few years, I think 2012 was 9 to 1, and 2013 it was down to 8.3 to 1. Right now, at 11.93 gold and 16.34 silver, you're looking at a 73 to 1 silver to gold ratio. So I'm not sure that in a bull move we'll ever see parity 1 to 1, but I certainly think that in the culmination of the bull market, you certainly could see silver overshoot that ratio of 8.3 to 1, perhaps as low as 5 to 1. But even just going down to the actual mining, what it is coming out of the ground, around 8.3 to 1 or just a little over that, that's a 10-bagger for silver just comparing to gold, not comparing to any fiat currency.
Yeah, so, just trying to get back to even in the physical world, real-world pricing.
Right, so just real-world physical pricing versus how much gold is coming out of the ground right now. I mean, you're looking at a potential 10-bagger in silver. So obviously that's not guaranteed, but I certainly think it's achievable.
You're absolutely right. It warrants mentioning. We talk about it time and time again. And as you said, Doc, you were talking about the fiat system versus a gold-backed system. And, the gold-backed system is certainly better than the fiat system. And that's because the fiat system is being used as a weapon against humanity by the banksters. And, G. Edward Griffin and I had this conversation about gold-backed currency versus a fiat system, a fiat currency issued by the Treasury. If there were honorable government, if we had an honorable government, that would work well. And he laughed. He said, the problem is that's an oxymoron. There is no such thing as an honorable government. And that's why you need to tie down these governments with precious metals, with gold. And just to round out what you're saying and back you up on the silver to gold ratio, we talked about the 1/10 of 1 ounce of silver being payment for a hard day's labor back in the Roman times. And I bet that hard day's labor was more than 8 hours a day, but let's just say it was 8 hours a day. At these manipulated prices, let's say you're one of the folks out there making $10 an hour and you're working an 8-hour shift, that's $80 in a day. That translates into 5 ounces of physical silver. And if you're one of the folks making closer to $50,000 a year in America, that's $25 an hour times 8. That's $200 a day. That translates into 12.5 ounces of physical silver. Now imagine making 1/10 of an ounce of silver for your labor. These prices are a gift.
And Sean's being very conservative because that salary of a 10 ounce per day, that wasn't the labor, the wage of a street sweeper. Those were the hired Roman mercenaries. So imagine you're really talking about like the salary for a, say, Blackwater operative or something like that, a modern day mercenary, which is not $8 an hour.
No, interesting. No, it's a great point. And I think it's hard to keep our heads straight when we hear about, well, for instance, our wonderful government has now gotten us into $18 trillion of debt. and the derivatives market is $1 quadrillion, and outstanding American consumer debt is somewhere in the neighborhood of 11 or 12 trillion dollars, and the unfunded liabilities are somewhere in the neighborhood of 150 to 200 trillion dollars. It's all mind-boggling, and as we noted with our friend Marco Byrne from Goldcore, that's the illusionary wealth. That's the ones and zeros. That's the intangible paper wealth. The real world physical wealth, silver, gold in physical form, oil, a barrel of oil in your pocket. How do you do that? I suggest you buy physical silver, physical gold, and that's why we would urge you to check out SD Bullion. Friends of ours, certainly, and great collaborators and supporters. I want to thank you guys so much for taking the time out of your busy day to join us. Eric Dubin and the Doc from Silver Doctors have been our guests. Doc, why don't you shout out your website? It's certainly a popular one.
Yeah, certainly. It's silverdoctors.com. All of Eric's work can be found on thenewsdoctors.com. And then we're greatly appreciate the opportunity to support SGUT Report over at SD Bullion.
Well, it means the world to us, and it really does. So thanks for taking the time to join us today. Rory, thank you as well, my friend.
Thank you.
Guys, check out Rory's blog over there at dailycoin.org. Is that right, Rory?
thedailycoin.org.
thedailycoin.org, and please check us out at sgtreport.com and thelibertymill.com, and click the SD Bullion banner at the top if you want to support us and support everything happening over at Silver Doctors. Gentlemen, thank you so much.
It's our pleasure, guys.
All right, guys, thanks for listening. Have a terrific week. Bye-bye.
Thanks, guys.
Bye, guys.